Most business owners ask the wrong question when it comes to bookkeeping. They ask, do I need a bookkeeper? When the real question is, what is it actually costing me to not have one? And once you look at it that way, the answer gets a lot clearer, a lot faster. I'll show you how to know when you're actually ready to hire a bookkeeper, what staying in DIY mode too long is really costing you, and what to expect when you finally make the switch. But before we get into that, I want to share something that I think puts all of it into perspective. Many years ago, and I mean many, I bought my first car and everything seemed fine. It ran well, nothing felt off, and I had no reason to think anything was wrong. Then I took it in for a state inspection and it failed. I took it to a mechanic and they couldn't find the issue. Took it to another one and the same thing. So this happened like 3 times until finally someone decided to look deeper. And when they got under the dash, they found that the previous owner had covered up the sensors with electrical tape. Not to fix the problem, just to hide it so no one could see it. I drove that car for over a year without knowing anything was wrong. Everything looked fine because the person who sold me the car made sure it looked fine. And that's exactly what can happen with your books. Not because anyone is necessarily trying to hide something, but when the right things aren't being tracked and checked, the problems don't show up on the surface. They sit underneath it, and then you keep driving. So let's start with the signs that you're ready for a bookkeeper, and I want you to be honest with yourself. Most owners already know the answer and just need to hear it. So sign number 1, you're spending too much time on your books. When you started your business, you signed up to be good at one thing, but running a business has a way of turning you into a part-time HR manager, a part-time marketer, a part-time operations person, and somewhere in there, a part-time bookkeeper. And here's the thing about that last one. Accounting and bookkeeping take real training to do correctly. People spend years learning it by either working in multiple businesses or going through formal education. And honestly, not everyone gets it even then. It's genuinely complex and it's a skill that not everybody is built for. The question isn't whether you can figure it out enough to get by. It's whether getting by is actually good enough for your business. Early on, time feels flexible. You figure you can handle the books yourself, and for a while, maybe you can. But at some point, the business grows, and the time you're putting into bookkeeping starts pulling you away from the work that actually moves things forward. Serving clients, selling, building your business. And every hour you spend on the books is an hour you're not spending on any of that. The thing is, it's not just about the time itself. It's about what your time is worth. When bookkeeping starts competing with higher value work, it stops being just an inconvenience and starts becoming a real cost to your business. You're regularly losing evenings, weekends, or even weekdays on your books, and you know that time should be spent elsewhere. That's a clear sign that someone else should be doing that task. Sign number 2. You don't really know what you're doing. This is the biggest one, and honestly, the hardest one for most owners to say out loud. But it's also the most important one. Here's the thing about bookkeeping being done incorrectly. It doesn't always look incorrect. You can have transactions entered, categories assigned, and reports that technically exist and still have books that are completely unreliable. And you'd have no idea. I've seen this play out with my own clients. Loans that were never entered into the books, assets that weren't there, personal and business completely mixed together, numbers that didn't match their tax forms. And in every single one of those cases, the owner didn't know something was wrong until someone actually showed them. They weren't being careless. They just didn't know what they didn't know. That's the real danger here. There is a big difference between having numbers and having numbers you can actually trust and use. If you're not confident that you know what needs to be tracked, how it should be categorized, and what your reports are supposed to look like, then the odds are good that there are issues in your books that you can't see right now. Sign number 3, you're neglecting your books or you're avoiding your reports. This one shows up in a really specific way. Some owners open their profit and loss or their balance sheet and either nothing makes sense, or they just close it and move on and tell themselves they'll deal with it later. But later keeps getting pushed farther and farther out. And some owners don't even bother looking at their reports at all. And I want to be clear that this isn't about not caring. Most owners who avoid their reports care a lot about their business. It's just that the reports aren't usable. And a profit and loss that doesn't reflect reality isn't a tool, it's just a useless document. So here's a quick way to think about it. If someone asked you right now to make an important business decision based on your financial reports, would you feel confident doing it? If the answer is no, or even not really, then your books are not doing their job. And avoidance is almost always a signal that something needs attention. The longer it goes, the bigger the gap gets between what the books say and what's actually happening in your business. Sign number 4, you're making decisions without clean data. At some point, every business owner has questions like these. Can I afford to hire? Should I raise my prices? Why does this month feel really tight when revenue looks fine? And if you don't have clean structured financials behind you, every one of those decisions becomes a guess. And that's the thing about bad financial data. It doesn't just give you wrong answers. It stops you from even asking the right questions in the first place. And the decisions that get made without correct numbers have real consequences. Not because owners are making bad choices, but because they're working with an incomplete picture. You can't make a confident decision about hiring, pricing, or growing if the numbers behind those decisions can't be trusted. Sign number 5, you know you need a cleanup. This last one is pretty straightforward. If you already have a feeling that your books are behind or that something isn't right in them, that feeling is not going to go away on its own. A cleanup is almost always the starting point when a bookkeeper gets involved. Before any ongoing work can be done properly, the books need a solid and accurate foundation. And I hear from business owners all the time that they want to wait until things are more organized before reaching out, but that's completely backwards. Needing a cleanup isn't a reason to wait. It's the reason to start. The longer a cleanup gets delayed, the more it costs in time and money, and in the decisions that get made based on those numbers that aren't correct. Now let's talk about the other side of this, because not everyone is at the point where hiring a bookkeeper makes sense yet, and that's completely okay. Here are 3 signs that the timing might not be right. Sign number 1, the revenue isn't there yet to support it. Bookkeeping is a service, and like any service, it comes with a cost. If your business is still in early stages with very low transaction volume and tight margins, outsourcing your bookkeeping may not be the right move financially. That doesn't mean ignore your books. It means be intentional about doing them yourself until the revenue is there to support handing them off. And remember the question we started with. What is it actually costing you to not have a bookkeeper? When you can honestly answer that question and the cost of not having one outweighs the cost of hiring one, that's your sign. That's when the timing is right. Sign number 2, you're not willing to move to an accounting software. This one is pretty straightforward as well. A bookkeeper needs proper accounting software to do their job correctly. If your books are currently living in a spreadsheet and you're not open to making that transition, the working relationship isn't going to work the way it should. And it's not just about working with a bookkeeper. Tax professionals also have a hard time working from just a spreadsheet. The data isn't structured the way it needs to be, and important details can get missed or misread. So if you're still in spreadsheet territory, this is the moment to rethink that and make moving to accounting software a priority. That means getting your books into the right system and as clean as possible before bringing someone in will make the whole process smoother and less expensive. But keep in mind, helping you make that transition is something a bookkeeper will help you with. Sign number 3, you don't trust someone else with your books. This last one is important to be honest about. Bringing a bookkeeper into your business means giving someone access to your financial information and trusting their expertise to handle it correctly. If you're not in a place where you can do that, the relationship won't be effective, regardless of how good the bookkeeper is. But I want to address something here because this concern comes up a lot, and there are ways to feel secure about it. You should not be sharing your login credentials. A good bookkeeper should ask you to have their own login created specifically for them with the access they need to do their job. In QuickBooks Online, for example, you can set up an accountant user which gives them the access they need without handing over your personal credentials. Most banks also have view-only access for bookkeepers. You stay in control of your account and you can see exactly what they have access to. That separation is not just good practice, it's how it should work. So if trust has been the thing holding you back, know that there are ways to structure this that keep you informed and in control. So now that you have a clearer picture of where you stand, maybe you recognized yourself in several of the ready signs. Maybe you realize the timing isn't quite right yet. Either way, knowing is valuable because it means you can make a real decision. If you've determined that you're ready, here's what to actually expect when you start the process. The first thing most people don't anticipate is that getting a bookkeeper involved almost always starts with a review of where things currently stand. Before any ongoing work can begin properly, the books need a solid and accurate foundation. A good bookkeeper or an accountant is going to want to look at what you currently have before they can even give you an accurate price for the work. That might mean reviewing your accounting software to see the state of your transactions, your reconciliations, and your reports. Or if you're still on the spreadsheet, that means reviewing that setup to understand what's there, what's missing, and what it's going to take to get things moved to an accounting software. Things like loans that weren't entered, assets that aren't accounted for, transactions that were miscategorized, or personal expenses that got mixed in, all affect the scope of work and therefore the cost. A thorough review upfront is how a good bookkeeper gives you an honest answer about what you're actually looking at. The second thing to expect is that this is not a hand it off and forget it situation. And honestly, it shouldn't be thought of that way. Bookkeeping is more of a partnership than a full handoff. You're still going to be involved. You'll be providing information and answering questions about things that only you as the business owner can answer. And depending on the scope of work, you may decide not to hand everything off at once. Some owners start by outsourcing the cleanup and the monthly close and keep all the other pieces in-house for now. That's completely fine. The scope should match where you are and what makes sense for your business right now. What a good bookkeeper does is keep you informed about what's happening in your books. The goal isn't to create a dependency where you're locked out of your own finances. It's the opposite. It's to get you to a place where you can actually understand what your reports are telling you and can use that information to make real decisions. And that's really the shift that happens when the timing is right and the right person is involved. You go from hoping your numbers are okay to actually knowing what's happening in your business. That's not a small thing. For a lot of owners, it changes how they run everything. Now that you know where you stand, the next question is whether your books are actually in good enough shape to hand off to someone who will handle them correctly. If you haven't watched this video yet, click right here because it will show you exactly what to look for before you make the next move.